Will silver and gold take off or crash? How you doing, everybody? Welcome to Empire Precious Metals. Stormy here. If you're new to the channel, I'm not a financial advisor. I'm a guy in a bucket talking about precious metals. So make sure you blast that subscribe button, get the bell notification clicked. That way you get updated with any new content. Today I am talking about both metals, silver and gold. And typically, if you're familiar with this channel, I like to talk about the metals separately. Usually I'll do a video about silver or I'll do a video about gold, but typically I don't really like to do videos about the both of them at the same time. I just feel like it's a little bit better to be more specific with what I am covering on a particular topic. But today I am talking about silver and gold and whether or not it's going to take off or crash. Now, there have been so many things happening this week as it relates to the price of silver and gold. We constantly are seeing the prices spiking and then crashing down and then basically erasing all gains from the day prior. Gold in intraday trading, it hit an all-time high of $2,077 or $78 just the other day. It's really remarkable what is happening, and there are a lot of different things at play here. We've got inflation now at 7.9%, and that's before we start incorporating the ripple effects of the crisis that's occurring between Russia and Ukraine. It doesn't take into effect the price of oil and how that's affecting gasoline, and just the ripple effect is going to be so significant. It's going to be interesting to see what ends up happening to that overall inflation number. Aside from that, you've got a lot of cryptocurrencies that are starting to pretty much tank. It seems like the federal government in the United States is starting to indicate that they're going to have even more oversight over cryptocurrencies, which is a major selling point of crypto in the first place. So a lot of these different things have been causing silver and gold to pretty much go up, down, up, down, up, down. And it's hard to make sense of all of this. So because it is difficult to make really any sense of whether or not it's a good time to be buying silver or gold, I have a very special guest today. I have Lior Gantz. He is the founder of Wealth Research Group, and I've had Lior on this channel in the past, and Lior has a ton of experience in this area, and he's going to be able to make sense of the good price of which you should be buying silver and gold, when you shouldn't be buying silver and gold, and just how high or how low in terms of overall percentage swings indicate a good time to buy silver and buy gold. So we're going to watch that interview real quick, and then we will hop back here as soon as we wrap up. Everybody, I am really excited to have Lior Gantz, founder of Wealth Research Group. This is the second time you've been here, Lior. How you doing?
Doing well. How about yourself?
I can't complain. I'm just watching what's happening in the world with silver and gold and kind of shaking my head, and I'm kind of fortunate that I am able to speak with you right now, because you're pretty much an expert in this space, and trying to make sense of everything, it's been a little bit challenging, so I appreciate your time.
Thank you. Absolutely.
Yeah, do you want to we'll just jump right into it, and what is on everybody's minds essentially are the prices of silver and gold, and they are really kind of they're up $70. Gold's up $70 one day. The next day it completely pulls back, if not, loses any of the gains, the very next day. Silver's up, then it's down. With rate hikes and everything like that, do you think it's going to kill prices, or what do you think is going to happen?
With regards to the volatility, especially in gold, but also a little bit in silver, but let's talk gold first. Volatility for gold means that historically, if you look at the gold volatility, not the VIX, which is the fear index, but there's another index that's called gold volatility. It just measures these spikes that you're talking about, where it's one day up $60, $70, or a 0.5% a percent, and then it's down the next day the same amount, etc. And gold volatility historically means that we're in the early innings of a very big move. Every time you have a lot of volatility, it means that there's a lot of traders and also big players, whales, that are entering or exiting. In what we're seeing in 2022, obviously with a new all-time high this Tuesday
Yeah,
intraday at $2,078. You're seeing a lot of big money coming in. It has to do a lot with what's going on in Russia and the Ukraine,
sure.
because not only is yeah, so if you've seen gold prices in previous crisis situations, let's say March 2020, you know that gold can
Mm-hmm.
fall apart
Mm-hmm.
in crisis situation because people are liquidating everything and they're getting margin calls and everything like that. But when we have something like right now, where there's a lot of liquidity, there's certainly no shortage of credit, and business conditions are really good around the world. It's not like we're in a deep recession with 15% unemployment, etc. The need to sell gold is diminished, and the need to hedge with gold is increased because you're seeing that the S&P 500 is down like 15%
Mm-hmm.
in 2022. The Nasdaq is in a bear market in 2022. If you look at the Nasdaq 100, 82 out of the 100 companies are in the red. And if you look at the S&P 500, 367 out of the 500 are in a bear market. And so this is classic 2016 trading because gold is serving as a hedge. If you have a portfolio that like most people that has a lot of tech in it or financials, and healthcare, then you are having a very poor year,
Yeah.
and you can hedge that with gold and silver. If you Google biggest one day inflow to GLD ETF
Mm-hmm.
in history, you'll find that the biggest one day inflow, you ready for this? Since inception, since 2004. You'd think maybe it's the height of 2008, maybe it's
Right.
the double dip recession, the Euro crisis, 2018. It was January 24th,
Wow.
literally a month and a half ago.
Wow.
And so smart money is definitely going in.
Right.
We're still not seeing a lot of retail because one, they don't believe it. They just don't believe it. They've seen 2021, the year where everything was lined up for gold to go to whatever anyone can speculate it will go to
Mm-hmm.
because of inflation, and it didn't do anything. In fact, it closed the year down.
Right.
And so a lot of the retail has missed this move into all-time highs, and they're still a little perplexed because they see that what is it? Today's the 10th. So on the 15th, they see that Jerome Powell is going to raise rates, and if you Google raising rates, or if you look at information that's out there about raising rates, it there's a misconception or there's a traditional wisdom that says raising rates is bad for gold,
Right.
and it's absolutely not the case. If you look at, if you go to wealthresearchgroup.com/2022, which is the special download report that I created for your viewers, with the full economic outlook for 2022, it was written to discuss that very subject in depth, including graphs and charts and historical figures. The Fed has raised rates six times or six cycles of rate hikes since 1971. So since we've gone off the gold standard, twice in the 70s, we've had one in the 90s, one in the 2000s. I'm sorry, two in the 2000s, and we've had the 2015 till 2018 one. And six out of six times, when the liftoff begins, so
Mm-hmm.
this would be in 5 days from now, gold on rate high cycles, do you know what it does? It goes up six out of six times.
How
So
long does it?
100%.
How long does it like continue on an upward trajectory? Is it? I would imagine it's like something that's relatively quick. But then does it
So,
eventually pull back, or does it like hold like a new baseline?
okay. So obviously in the 70s, it rose and continued to increase until 1980. In the 90s, it barely did anything. In the 2000s, it continued on to 2011, and it became the longest bull market of any asset class in the world
Hmm.
for 11 years in consecutive up years, including 2008. That no asset class has ever done that. And then in 2015 till 2018, Well, 2015, as you know, was the bottom at 1,053 dollars an ounce, and today we're double that. So, I guess the long-term trajectory of gold in the past 50 years has been to compound at an annual rate of 6.6%. But in the millennia, so from 2000 and onwards, it has beaten the S&P 500, the Nasdaq. It has beaten most asset classes because it's gone from 250 to around 2000. So as a major asset class to go up 700% in 22 years, that's pretty remarkable.
Yeah.
I would say that to your question, the average from liftoff, in other words, from the Fed raising rates till the end of the rate cycle, the average has been 30%. So if we take, let's say, being conservative, 2000, by the time this is on the 15th, it could be 2050, it could be 1950. So let's take just a very easy one to use and a realistic one for 5 days from now. Let's say $2,000 an ounce. 30% of that is $600. So what we're essentially looking at is by the time the Fed starts to U-turn on monetary policy and ease again, gold can be at 2,600. We're looking at really high gold prices historically. And I would say three things. One, once the Russia situation starts to unwind, the more diplomatic talks, because obviously Russia cannot continue to support this military operation financially. It's just not. That country is not built for these types of military operations that are lagging, not winning. It's just
drawn out.
Yes, basically Putin's bet has gone wrong, and he hasn't been able to accomplish what he wanted. And I think that he's now looking for what's the best way to save face and get some of my diplomatic goals lined up. So once that comes, obviously a lot of money will flood out of gold. At the same time, raising rates is the Fed signaling that inflation is a problem and that they do need to handle it and that they're walking the talk. And that's why historically raising rates has helped gold. At the same time, the markets have been punched a lot. If you've ever been in a fight, if you get punched once and all your friends are looking at you, you get up immediately because you want to show them, hey, I can do this.
Sure.
You get punched twice or three times, you still may get up. But once you realize the opponent is better, it's not that easy to get up. And so after millennials and institutionals have been buying the dip for 12 years, and now they see that, man, companies like Facebook can go down 25% in one day. Companies like Netflix can go down 40%. I mean,
insane.
The trust level in the markets are not there. And so even if the Fed raises rates, which signals, hey, the economy is very strong, we need to raise rates despite everything that you see around the world, despite the potential for major conflicts between Russia and the U.S. and Ukraine, NATO, the whole thing. We're raising rates. This will be good for the markets. They'll appreciate that he's taken action and taken a tough decision to stem inflation, etc. But it's not enough. Stocks will wobble for many more months, and gold will continue to be that hedge. So gold has a very good 2022 ahead of it. The problem right now is silver. Silver has just not made any big move, move that attracts the speculators, any speculative money, the retail money. It's just not there yet. So I'll give you two major points for silver. One is 29.5. That's where the big resistance is. So we need to watch how it climbs to 29.5 and then fights to get and chew through that thing. Once it does that, it will really have a really big move towards the 36. So if it goes to 29.5 and if it breaks resistance and starts to go to the 30s, it will go to 36 real quick, and you'll have a lot of options, futures, all sorts of speculation on it, and that's really good for the silver and for the sector itself because it's been really sleeping quiet. Two, you need the dollar, which right now is very strong because it's such a safe haven in the world of fiat currencies, it's really strong. You need to see a weaker dollar. A weaker dollar will be the result of two things. One, reopening of the economy.
Mm-hmm.
That will help money velocity, and money velocity obviously weakens the dollar. A currency, once a currency is from the word current, right? From the word from you need to circulate the currency, and so when you circulate the currency, way more than we do right now, because people are just not going out yet as much as before 2020.
Mm-hmm.
You'll see the dollar weaken because you'll have more global economic activity and other companies. Obviously, all the governments and institutions that have held a lot of cash and a lot of dollars are going to need to hedge that, move to other currencies, etc. So we are in a point now where the dollar is going to get a much weaker. Obviously, once Russia tensions subside, once we reopen, so that's really good for silver. Oil, which is the biggest commodity in the world that is correlated with silver, is already at near all-time highs. So it's looking really good for silver. And what we really want to see is a little bit of weakness in the dollar for this thing to explode higher. So if you're looking at those points, I think that's what's missing right now. I love where we are with gold. I'm not a buyer of gold at these levels.
Mm-hmm.
I love where we are with silver. I'm not a buyer of silver at these levels because I like silver when the risk reward is amazing, and
Right.
that risk reward will be much better once it breaches above that 29.5, because historically, on a technical analysis basis, it will have an 85% probability of going to 36, and that's a risk I'm willing to take, and I'm willing to even leverage that risk with options or futures or miners because it's such a high conviction play. Whereas right now we just don't know. We just have no idea what it will do. We know where the support is at 22. We know the resistance is, but we just don't know what it will do. Um, silver prices are a derivative of everything else that's going on. They don't trade just because of themselves.
Mm-hmm.
And obviously, there's a lot of short positions, concentrated short positions on the COMEX for silver. That's why you have basically two markets. If you go to any bullion dealer, you're not going to get silver at 26 an ounce right now. You'll get it for 38, 37. There's two markets for it. So the market that counts, that we want, is the COMEX, because that's where the big money is. And that's going to move prices for the physical by extension. Okay, so if you're looking at 2022,
Yeah.
March 15th, the Fed raises rates. Really good for gold and silver. Not so much of a big deal for stocks. June 15th, the Fed will raise rates again, in my opinion, and it can even raise them by 50 basis points, which will be the first time since Greenspan in 2000 that they would do that. Very good for gold and silver. I think it's going to be nice for stocks. In other words, they're going to accept that, but stocks won't rally on it. As we head into the second half of the year with midterms, that's going to be a lot of the assurance that the stock market needs. And I think that's when a lot of the fear will go to the sidelines, will resume some sort of an early stages of a renewed bull market. And I think that it's too hard to speculate on what gold and silver will do then and there. But certainly everything looks great, but it's not cheap. So it's not like I'm out there aggressively accumulating physical gold and silver. What I am interested in are the miners. The miners are very cheap, and they haven't moved as much. In fact, on our newsletter, we cover both what I'm talking about right now, which is general stuff, and also specific opportunities. And our number one company for 2022 is already up like 37% since we started the year, and almost 100% since December 15th. So
yeah, there's been a ton of activity, and especially a lot of the companies that I covered. It's like every couple of weeks you see another release, and it just tells you just how high the stock is moving.
Yeah, and here's what's missing for this to become even better. There's no M&A activity.
Mm-hmm.
So you can think about the miners, most of them, like this. There are the majors, the companies that have multiple mines that produce a lot of cash flow, pay a dividend. They're in the multi-billion-dollar market cap, and that's where the institutional money also is. Now, the junior miners, what they try and do is they try to prove to one of these bigger miners
Yeah.
that their property is worth buying. Uh, all these properties are always trading at a discount until there's an offer on them.
Right.
It's very rare for a developer or an explorer to be trading rich or in a rich valuation because the risk is so immense. Because this junior will never produce on its own. It's very rare for a junior to take on the expenses that are required to actually go into production on themselves. What they want to do is just like a biotech startup. They want to prove that they have something so that a company like a Merck or a Pfizer or something like that will buy them out for a
Right.
large premium. And that's what's missing right now. We're not seeing the Barricks, the Newmonts, the Rio Tintos buying the small ones. And once we start seeing that, then investors are going to say, okay, who has a promising project
Mm-hmm.
that I think will get bought out? Because I can buy it now, and in 30, I'm sorry, in 3 months, in 6 months, in a year, it will double or triple or quadruple, etc.
Yeah.
Because that's the opportunity with these miners, because they'll get an offer from
To buy them.
a large, yes,
Yep.
to buy them. Okay, so M&A activity is really important. We want that. And we also want to see what we saw in 2016, which is that these majors show how healthy the industry is by dishing out bigger dividends and by telling shareholders that things are looking great. We want to know that the mining industry is healthy. We obviously know that on a global basis, um, the median price to produce gold is about $1,075. So these miners are printing money right now. Their margins are almost 100%. The industry is very profitable, and we want to see some of those profits move into the M&A activity. That's what I think will really jolt these miners, the smaller ones, where the big gains can be had.
So now you already covered so much. We talked about the stock market. We discussed, whether or not millennials will be turning to gold if silver can hit 30, or you're thinking if it breaks that 29.50 resistance level, then you see it possibly hitting $36. Let me just ask you real quick, what are your thoughts about Fed coin? Like what's going to happen as government steps in even further? I mean, we've seen since the last time you and I spoke, Bitcoin, I think, was right around like the $60,000 mark. I haven't checked it in a couple of months, but like right now I know it's like in the low 30s if I'm not mistaken. What are your thoughts with Fed coin?
I mean, it's not something that I consider viable for the next 5, 10 years.
Yeah.
So I don't give that much thought. I think it's a back burner project that the Fed is basically being forced to research and look at academic papers and all kinds of stuff. But um, it, it's not something that America's ready for or the world
Yeah.
is ready for. These are things that take, unless there's a crisis that quickens these changes.
Sure.
It's not something that you would voluntarily do. Nixon didn't take us off the gold standard because he woke up one day and said, "I think I have a good idea."
Right.
He for 3 years, all these European prime ministers banged on his door and told him, "We want an audit. We don't believe you have 35 an ounce for every $35 that
Mm-hmm.
are in existence." And so he had to either admit and default or do something about it. So he temporarily disconnected that to win against the speculators, because and literally, if you look at the original tape from August 15th, you'll see that he tells the nation, "If you don't that this is in order for the dollar to remain robust and
Mm-hmm.
strong. So, I mean, these things do not happen because of comfort. They happen because of crisis. Bitcoin was created because of crisis, because of 2008. Um, the best innovations are born out, obviously, of frustration and crisis. But the Fed coin, in my opinion, is a project that's really in its infancy. Um, because Facebook wanted to do the Libra,
Mm-hmm.
there was more pressure on Congress and on the Treasury to make sure that if there's any Fed coin, it's the federal government that does it and not a private corporation. But I mean, I just I don't spend much time thinking about it because it doesn't change anything in my daily life. When
Sure.
it really becomes important, you'd know. You'd start seeing this becoming a topic, an issue. Right now, the topic is inflation is out of control, and at the same time, the jobs market is so out of whack because the thesis that everyone will get vaccinated and go back to work just
Didn't
did not
happen.
materialize.
Yeah.
Yeah, because of various demographic events that I
Mm-hmm.
can speak of, but um, those are the priorities for the Fed. The Fed wants to recreate 2017, 2018, 2019 when we had record low, basically the Trump years. We had record low unemployment, a really good stock market. People were making money. It was just a good overall economy. That's basically the model that they want to go back to.
Yeah. Yeah. I mean, and real quick too before we wrap up, because I
Sure.
am curious. You said that you are not a buyer for gold at these rates. Silver, you're also not a buyer
Mm-hmm.
at these rates. Curious as to what price for both metals for you to physically buy silver and gold. What do you typically kind of max out at or cap out at it? And you're saying, I'm done buying
Yeah.
for now.
Yeah, my strategy has always been the same. I took 2 years worth of my living expenses as a household. So just theoretically, let's say it's $5,000. I took 2 years of that. That's 120 grand, and I converted it into 80% physical gold, 20% physical silver, and that has been and always will be my physical position. I adjust it if my living standards increase. In other
Mm-hmm.
words, if I get wealthier, I want to have more because that 2 year in my mind is, hey, if we have a very deep recession or a depression that lasts even 2 years, I want 2 years worth of my boom year or
Yeah,
regular
makes
year's living
sense.
expenses. Okay. When do I add? Because I already have that. When do I add? One is, like I said, if my living expenses go up, I add regardless of the price. If I did this calculation today and I found out that I'm low, I'll buy today, even at all time highs.
Mm-hmm.
Um, Two, if it's less than 5% of my net worth.
Okay.
Okay. And three, after big crashes. I buy a little bit after big crashes. I just add more. And what is a big crash? A big crash for gold is over 20%, and a big crash for silver is over 35%.
Okay.
So that's when I start to add a little bit more. And there's no law or rule on how much more. I
Right.
remember in 2018, September, gold went all the way down to 1,188. And I called, I used milesfranklin.com for most of my purchases. And I ordered gold that day. Um, and I think I ordered silver like a month later. And then April 1st, 2019, if you remember, the Central Bank of Central Banks, the BIS, Bank of International Settlements, readjusted gold to be a tier one asset.
Mm-hmm.
Gold was $1,291 an ounce that day. And basically changing it from a tier three to a tier one meant that they believe it's basically worth double or 2,582 an ounce. So
Right.
even the Central Bank of Central Banks believes that gold is worth like 2,600. So that's the last time I bought a big chunk of gold and silver. I wait
Interesting.
for big big opportunities to do that. But that's also because I already have
Right.
if you already had that, maybe you think the same way. You know what I mean? So it
Sure.
just depends on your situation. I think in general, it's good to understand that gold does not gold and silver do not compete with your stocks portfolio, real estate portfolio, or anything. They compete with your savings.
Right.
So if your goal is to have $100,000 in savings or $1 million in savings, that is the bucket that you need to diversify and not just be in pure cash, because it just doesn't make sense. If Warren Buffett, if that thing would trigger in his head,
Yeah.
he would stop comparing gold
To a
to
shiny
Apple.
rock. Yeah. Or
There's no
right.
reason to. Why don't you compare gold to the cash on hand at Berkshire? Go back, hire the best accounting firm. Warren, if you're listening, go to like PwC or BDO or Ernst and Young and ask them, hey, what would have happened? Why don't you back test this for me? What would have happened if I took a quarter of all the cash that Berkshire has on hand, and what would have happened if I had bought gold instead of buying like short dated treasuries, or
Mm-hmm.
what would have made better sense? And I mean, Berkshire could have been double or triple its size just on if it had gold instead of cash. And think about all these new investors that it would have attracted as well, that now see that, hey, Berkshire literally has physical gold on its
Yeah.
bank on its balance sheet. So, anyways, I think all companies will benefit from that same thing. But look, if you are sensible about gold and silver, if you do not sleep with gold and silver under your pillow, and you're not like a bug of gold and silver, if you understand their role in your life, that they have a really important role, especially gold that has compounded at 6.6% a year for the past 50 years, whereas silver has done 3.3%. And silver is much more of a trade, of a, hey,
Yeah.
it's cheap now.
Yeah.
It's why don't you make a boatload with silver, sell, and buy some gold with that, because
Abs-
gold compounds better. But
yeah.
anyways, maybe I'm gonna get a lot of hate from the silver people, but
No.
it's just facts.
I say that all the time. People familiar with my channel, a lot of my live streams and everything, like I buy silver, I sell it on the upswings. I'm constantly in and out buying, selling, and all of those profits with silver, I just kind of dump it into gold.
Good,
So you're
good for you.
preaching to the choir. And a
Nice.
lot of people who watch this channel, I mean, I think they understand that strategy completely.
Okay.
Lior, I really do appreciate the time today. You answered a ton of questions. A couple of times throughout this, I jotted down the different timestamps of where we were talking, because there's so many good sound bites, and I have to figure out which one I'm going to lead with. But Lior Gantz, founder of Wealth Research Group, I really appreciate the time, and I'm really looking forward to our next conversation.
Thank you, sir.
So there you have it. A lot of really good information from Lior. He gets into the technical analysis that I typically can't make sense of myself. I pretty much just buy silver or gold if I want it. I don't really analyze the charts. I don't analyze the gold silver ratio. If it's up at all time highs, I am buying. If it's low, I'm buying, but maybe I'm buying a little bit more. But I'm curious as to your thoughts. At what rates would you be buying silver and gold in terms of overall percentage gains or drops? Or if you prefer not to look at it in terms of percentages, do you like to buy your silver and gold at certain points? Do you have a threshold at which you won't buy any more silver and gold? Or, is there a certain amount that the spot prices have to hit and you're going to back the truck up? I'm very curious as to your thoughts. Definitely let me know in the comments down below. And I would like to quickly thank these elite channel supporters. And if you haven't already become a channel member, please check out the awesome perks and join today. With that, this is Empire Precious Metals. Until next time, long live the Empire.